Today on The Explainer, Rocket Lab. Their success is soaring, but is their stock price just out of this world?
So here's the big question. How can a company do everything right, but its stock looks so incredibly risky?
All right, first up, let's look at the good stuff. Why are investors so excited about these guys?
Get this, 84 successful orbital launches. That's a track record that proves they are both reliable and fast. And they're not just a one-trick pony. They do launches, testing, and even build the spacecraft themselves.
They just landed a huge $190 million deal with the Department of Defense. That's a massive win.
And their mission waitlist? It's worth over $2 billion. Now that's some serious future demand.
Okay, so operations look fantastic. But what about the money side of things? Let's take a look.
Revenues are way up, which is great, but those losses show they're still burning through a lot of cash.
So it's a classic two-sided coin. They have a ton of cash, but they're spending it fast to grow.
And that brings us to the bear case. Is this sky-high valuation really connected to reality?
I mean, just look at this stock chart. Investors are clearly betting on some absolutely explosive growth here. But some technical analysis, these wave charts, hint that a big price drop could be coming.
Right now, the market values this company at a jaw-dropping $38 billion.
Yet some models based on cash flow say its intrinsic value is actually just $1 to $5 a share.
Whoa, that means the price has zero room for error. Basically, everything has to go perfectly from here.
So what could actually go wrong? Let's break down the biggest risks for any investor right now.
Rocket delays, relying too much on one customer, government budgets, these are all major red flags.
So which is it? Is their flawless performance what matters, or does that scary-looking valuation tell the real story?